Happy Thursday, everyone. I'm Olivia Bono-Voznenko, a.k.a. The Voz, and I'm here with Stephen Guilfoyle, who we like to call Sarge. Sarge, thanks for joining us at the lovely New York Stock Exchange today.
Olivia, I can't tell you what a pleasure it is.
Starting with the macro, we have the weekly jobs dance, as you like to call it, and we have import and export prices. Tell us more about that.
I was a little surprised with the price movement. I thought maybe with the weaker dollar that we wouldn't see an equal rise, almost an equal rise for import and export prices. I think that's quite mildly inflationary, not only here but abroad. As for initial jobless claims, upside surprise, but if you look at the numbers, it's almost all out of the state of New York. So I don't know what that says, that we had a 20,000 individual hike in people filing for unemployment claims, but they almost all came from New York State. There's got to be an underlying reason for that, like a specific reason, which I haven't found yet.
Sarge, we also have retail earnings playing in the game today. Macy's kicked it off with a pretty slow start. How are the other retailers doing, and what's the effect today?
Yeah, I think what you're seeing here is really the cages have been rattled. All right, the retail sector isn't what it used to be. I think people still like to buy stuff. They just don't like to do it the way they used to. I think these companies are going to have to evolve or become much smaller. I think the real crown jewels of this whole retail season are going to be next week when you get Walmart and Target, because those are the bigger corporations that basically cater to the middle class and the lower middle class, and they have national distribution. So, and they also have huge online presence. So if anybody's going to compete with the Amazon, it's going to be these guys.
Sarge, how has your safety dance been doing? Gold, treasuries, talk about that.
You know, I mean, the VIX came back in and it's working its way back higher. We had that nice run in gold, but it's come back in. Now it's back below that 1275 level that we were watching all along. I think if it makes another run at 1300, that you're probably going to want to add to your allocation. My current allocation right now is 7.5%. If it makes another upward surge, I think you want to go to 10%, or at least I want to go to 10%, because on the day that the monetary system collapses, which isn't next week, but on that day, you're going to want to have some gold in your pocket, and that's going to be more valuable than even treasuries.
All right, well, we did a lot of dancing today. The jobs dance, the safety dance. What can we possibly expect next?
Oh, you don't have to wait very long. All right. This afternoon, you will hear from Esther George, the most hawkish member of the FOMC. She's the only one who's really, I'm not saying you have to agree with her, but she's the only one who's brave enough to speak her mind. And she's going to do that. She's going to be on mission. She's probably going to sound hawkish. She may rattle the cages a little more. And then in the morning, you have retail sales. After we're in the midst of the retail season of earnings season, and you're going to hear retail sales. So we have a couple things before you even get to next week's CPI, which we can talk about another time. You got a couple things in your immediate future that are going to change or exacerbate the movement in stocks today.
Well, Sarge, thank you so much for keeping us in the know. We have a lot to talk about next week. You have a good weekend.
You have a good weekend.